Kenny, I'll hand over to you.
Thank you very much, Shan. Well, good morning, good evening, whatever you guys are. My name is Evgeny Zada, and I'm CEO of CyberTrust SA, which is Luxembourg fintech company. And over the last 2 years, we've been working quite a lot in the area of crypto securitization. And basically, I want to share with you some of the things that we are doing. So my presentation today is called Fueling Crypto Securitization and Bringing Institutional Capital into Crypto Assets. Crypto asset class. So Chen, can you please go to the next slide? Okay, so I mean, you all guys know that we are witnessing the creation and rapid development of a new asset class termed crypto assets or digital assets. And those types of financial instruments are very, very new and very unclear, and unclear to investors and regulators and just around pretty much to everyone, involving the investors that actually buy, including us. You know, we have investors in a lot of digital assets, and it's very important to not only classify them and understand the value of it and how they are creating efficiency around the world, but it's also important to be able to hold them in the correct way. And right now we see there's a big gap in that. You know, everybody's talking about the fact that institutional money is coming into the sector, but the reality is very, very far from the truth. And the reasons I will go in further in our presentation. So Chen, can you go please to the next slide? So CyberTrust, you know, we are basically almost like an iBank in a way, but more like a fintech company. And what we do is we add trust and reliability to the crypto space for a very specific group of investors, which we define as institutional investors. Chen, can you please, next slide? So, okay, here's a main point, you know, main problem, right? Basically, any type of large financial investor, either bank or insurance company, pension fund, company, family office, hedge funds, even sovereign wealth funds, all have one single problem. It's not their money. And as such, they have a lot of fiduciary constraints and regulatory constraints that they have to adhere to in order to make very sound financial investments. And and some of them, they believe in crypto. They think that it's an interesting asset class. It's very new. It's unclear to them, but they're ready to experiment. However, even if they want to buy Bitcoin and Ethereum, they run into a lot of difficulties. And let's go over them one by one. So number one is title ownership, title auditable ownership. And this is a very simple concept. Bank wires the money out, and it has to book something for the asset, as an asset. And it has to be a traditional asset because they have auditors, Big Four, coming to audit them on a quarterly basis, and the auditor will, the first thing he will ask is prove me that you have an asset. And crypto does not have an asset. I mean, for the accounting purposes, there's no asset. And it's an immediate write-off for the balance sheet for the quarter that occurs, the purchase occurred, or it's a theft because the auditor comes in and says, okay, money went out, there's no asset, it's a theft. So they basically, you know, book it as a loss. So for them, you know, it's a big problem. There's no verifiable title, auditable, traditional ownership type of paper in that sense. So that's number one risk, but that's not far all. There are more things here. So the second one is counterparty risks. That's how the classification works. But what that means is that clearing and settlement of crypto instruments carries abnormal counterparty risks relatively to what they used to undertake. And it's very important because it's all relative. So they work with things like Clearstream and Euroclear, and it's basically risk-free clearing and settlement for them. You know, all the paperwork for the sales and purchase agreement will be in their back office, you know, T+3, which is T is a date of transaction, 3 days, this is the maximum it takes. Relatively in crypto space, as you guys know, we trade through Bitfinex, Bittrex, Poloniex, Kraken, and I mean, you know, those companies do not have, you know, IFRS statements. It's very unclear who owns them. Maybe some already trying to, you know, improve on that area, but it's still not ideal. There's no regulation. There is no regulatory capital. So for any kind of like not even pension fund, but family office that holds other people's money. Like it's not theirs. Like the people that are making the investment decisions, they're not the owners of that capital. So they have to take this risk into consideration. In fact, they're very limited to that risk, and they can only work where clearing and settlement risks do not exist. So that's the second problem. The third problem is, of course, it's very simple for us to understand, is cybersecurity. I mean, all of us, we hold it on Trezor, and in some cases, some sophisticated, they put it, it on some kind of drive offline, and basically, some people put it on paper as reserves, right? Some people just store it with Phoenix or Kraken, and they use other people, other custody solutions, or they use, storage walls. So, there's a lot of risk of hacker attacks, right? A lot of people hold their crypto on mobile phones, and I have many, many friends that got their crypto stolen. So it's a big problem, and institutional money manager does not want to deal with that problem. He's like, I do not understand it. I just want the security, right? And it has to be like the best security available to them, presently available. And that's another problem. And the fourth problem, and that's a very fundamental problem, which is really, if the first, first two are kind of solvable, right, with technology, the fourth one is not. And basically, when the bank or any large investor basically does their due diligence in crypto, if they're smart, and not many are smart, but if they're smart, they will figure out that there is no judicial or regulatory oversight, right, at all. And that's a very fundamental point, because any bank or any asset manager is really an entity that operates within the sovereignty of some kind of a country. And the sovereignty means that there's a judicial enforcement and recovery, and there are two functions that judicial system kind of has for any sovereignty is basically enforcement and recovery. And both of them are not possible in crypto. As you know, blockchain transactions are one way, and they're final. They're irreversible, right? So even if judge says, enforce and recover, hey, it doesn't matter, right? It's final. So in this sense, it's like it's above sovereign. So there's no judicial enforcement and recovery. And then the second problem is that, well, this is kind of like for any sovereignty, it's one arm, and the other arm is regulation, right? They regulate financial intermediaries, and they want to they want to basically come in and close the company down, whatever, apply force, but they want to regulate, and they do it sometimes smart, sometimes not smart, but they want to regulate. And judicial and regulatory oversight is a big red flag. It's a big issue for any traditional institutional investors to come in. And okay, now you can say, okay, we do not need any institutional investors. It's just too much for them. It's hard to do. Well, number one, it's not hard to do, and I'll show you how securitization actually solves that. But there's another big problem. We, as a blockchain revolution develops, as a blockchain technology develops, and IE and robotization and IoT, all of that gets built over the blockchain, it will require trillions of dollars of institutional capital. And there's only one way to actually get that capital, right? It's all concentrated in the hands of institutional investors. So we actually need them to actually develop blockchain and actually track liquidity, which is needed, especially in the early stages when the technology is not here yet. It's quickly maturing, but it takes a lot of effort and a lot of investment. And if you look in the history of similar type of innovations that build out infrastructure, they all required 1 to 3% of GDP of worldwide GDP. And today GDP is very big. It's over 100 trillion. So that means the blockchain requires, by analogy, it should require between $1 to $3 trillion a year. With a whole market cap below $200 billion, this is nowhere near what is needed. So let's go over. Chen, can you please next slide? So okay, so what is the solution? And we've been working on this quite a lot, and we changed it over time like 3 times. But the way our solution works right now is we chose Luxembourg as a judicial and regulatory regime. That's number one. That's very important. We think it's very, there are many benefits to Luxembourg regulation, and I'm not going to go into them, but this is a fundamental. We chose that regime, number one. Number two is we created a very, very proper very secure and very kind of bankruptcy remote structuring. And that's very important because they are kind of competition in space, right? People understand that this is a valuable thing, and there's competition, right? And this competition has almost like it can be classified in a spectrum, right? From really, really bad to really, really good. That's kind of highway, right? And many competitions, they kind of fall somewhere on that spectrum. So where do we fall? And it's very, very important to understand. So we provide very okay. So let's start with the bad ones, so that you can understand really bad ones and then the really good ones. So really bad ones is something like eToro, which is basically contracts, derivative contracts called CFDs. It's basically a contract for difference on a bet of, let's say, Ethereum speculation up or down. And it's bad not because it's a bad product, it's bad because there's no underlying asset under it, right? So it's a pure bet between two entities in the eToro system, right? It's a derivative contract. It's in a way that should be regulated on CFTC, but there's no underlying asset, or there's no principal underlying that particular instrument. Then there are instruments like XBT, which says that there is something there, but they do not show you what it is. They just say that we implement complex derivative structurings to basically get you that exposure. But if something happens, there's really no asset, right, to take control of. And then there are things like Grayscale that are the most proper and the most correct structure. They're fund structures based out of the United States. And it's a fund that owns only Bitcoins. And then they issue basically shared certificates or securitized certificates, which solve a majority of issues that I identified above at a premium. And the only difference is that, you as an owner of the certificate, you kind of have indirect control over the asset, right? If something happens to fund, they hire management sues them, you can get impacted because of that. And then there's more of very secure structures, and that's what we're doing in Luxembourg, and that's a direct securitization structures, right? It's basically, it's the same concept, but it's not a fund. It's basically their special purpose vehicles, each one for different currencies, as you can see. And we're starting with BTC, TH, and BCH as a three kind of crypto derivatives that we're creating. And we are not managers of those companies. That's a very important distinction, right? We are sponsors, but the person that controls the bank account of those entities is administrator, and it's a first out of the service providers that we put. We use our administrators CryptoTrust, and they are very good. We have a good relationship with them, and they manage those SPVs. They have a very strict contract, right, that they represent the note holders. And they do two things. They manage the bank account, and they create quarterly NAV reports and calculations. The second provider is Ernst & Young. And Ernst & Young is the guys that basically audit those financial statements on an annual basis. The whole structure has been created by Hogan Lovells, which is basically a law firm, and we also use ARN for a lot of regulatory compliance works. There's a paying agent with whom we're still negotiating, and they're a couple. And their responsibility is basically do redemptions and do specific integrations. And there is a clear stream, which is basically like a bank of banks. It's a company out of Luxembourg. It's called Clearstream Banking SA. And what it does, it provides clearing and settlement services worldwide for a lot of different types of securities. And then on the right-hand side, you see our securitization structure, which is basically, it's owned by Dutch foundation, by Dutch Stitching, called Six Wave Trust. And its whole purpose is ownership of those securitization vehicles, which are special purpose vehicles, which are really limited to what they can do. They cannot borrow any money. They can only basically, the only thing they can do is they can hold the underlying assets. And the underlying assets are, in fact, they have a contractual relationship. And right now we work with Zappo, and we're starting to work with Bitcoin Swiss, and we're evaluating opportunity to work with Ledger. So basically, we try to work with all the best companies that can provide security for those vehicles. And the way the security is done is there are two areas to the security. There's kind of a physical security area, and there's a technological security, right? Like off the internet type of security. So the physical security is really all concentrated in a company called Deltalis, which we have a contractual relationship with. It's basically a company that owns a Switzerland ex-military bunker facility in the mountain, and it provides physical security as well as radiation and ultramagnetic wave security because of the way the bunker is constructed. And then the technological security is done by those companies within the space inside the bunker. And this is maybe not ideal, but this is the best that you can get out at the moment in terms of safety and in terms of not worrying, when doing it yourself. So that's in short the overview of legal setup and of crypto securitization. Chen, can we go to the next slide? So why do I need crypto nodes for? Well, so the whole purpose of the above structure is really to take crypto and create security of crypto. It's almost like creating a derivative. It's almost, well, it's not almost, it's exactly like creating crypto derivatives. And so why do you need those crypto derivatives? And there are three things that you can actually do with crypto derivatives. Number one is you can actually buy and hold crypto derivatives. And you can do that or should do that because many institutional investors do not want to worry about security solution. They want risk-free clearing and settlement. They want regulatory and judicial oversight. They want clarity on tax, and they want title ownership and ability to audit in a traditional way. And also, they can also, as soon as they do it, you don't have to worry about inheritance, and you can actually hold them, inside the Swiss banking institutions, right? You can actually hold them in the custody of your private bank. Which is very, 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 very convenient for many people. So that's number one use case. This, and it's very, very safe because it gives you direct claim of the crypto, right? If you prefer to take the crypto back and hold it in your phone, you can actually redeem it and get the underlying crypto key into your own ownership, right? So that's kind of number one. Number two is you can actually sell and arbitrage, right? Right now, there's a huge, huge spread between Bitcoin and securitize Bitcoin in the form of a Bitcoin investment trust. It's so ridiculous. At some point a few months ago, it was 100% premium. So it meant that whatever the price on Bitfinex of Bitcoin was, Bitcoin Global Node or Bitcoin investment trust was selling twice that much. Right now the premium dropped to 30%, but it's still a very, very large premium. So, there are benefits of arbitraging this price difference. Ability to settle in fiat inside traditional banking system, inside the KYC/MLM regulation and framework, and also clarity and tax implication because the way Luxembourg, regulatory or sovereignty works is that it's a pass-through for tax purposes, which means that you do not pay any taxes at the level of Luxembourg. You only pay them at the level of where you have your holding company at. So that's the second use case. And the third use case is much more interesting, and this is really where we are focusing all our efforts. It's really creating new financial products. And it's very interesting because as soon as you have crypto nodes, which have a clarity on clearing and settlement, and there are many of them, and they have like ISIN and title ownership, you can actually create ETFs, which can be anything you can imagine, right? And use cases that we're working on right now is we're looking at 3x long, BTC or Ethereum, right? Like can you imagine like 3x? So it would be like 3x levered BTC, right? So whatever the price moves, it will be 3x of that magnitude of the volatility, right? So I should attract, I think, a lot of demand from speculation. We're also looking at things like treasury bills and Bitcoin terms, which is also a very interesting product because there are a lot of sovereign wealth funds and we're discussing with one of them in Middle Eastern countries. They basically hold a lot of treasury bills, and we came to them and said, listen, should you maybe consider diversification? You will still take a risk or take exposure of T-bills, but you will take them in the terms of Bitcoin, or you will take them in the terms of Ethereum, and we can structure that through synthetic structuring product which will have the Bitcoin crypto nodes or Bitcoin derivatives with underlying assets, the futures contract with them, and also the levered position on T-bills. And whoever is interested, you can directly mail me about the structuring. It's a bit complex, so I don't want to go into it right now. But overall, the point is there are a lot of really cool financial products that will come out of it, and it's going to be very interesting to see that developing, because as you know, the crypto instruments are really unknown. They're still really limited to a very small group of people that do understand technology, or they have some coding background, and it's not really widely adopted by either institutional investors or average retail investors. So if we can go to the next slide, Chen, please. Okay, so how crypto securitization works? I mean, it's very simple. You basically open deposit with us, and we're working on mobile and web app for CyberTrust, and we have a big pipeline for IT for next year. And then basically you deposit crypto and you pay with caps. We created a caps token, and you can only pay with caps token for the crypto securitization, because we're saying that we want to make it open platform. We don't want to make it closed platform, and we basically will do the ICO next month with the caps token, and they will be available on the major exchange, so you can buy them, and you can use them for securitization. It's really simple. One caps give you one BTC equivalent. So that means that one caps you need to basically securitize one BTC or equivalent of the price in ETH or BCH or any other currency that we will offer next year. Right now it's only 3. We're going to launch with 3, BTC, Ethereum, and Bitcoin Cash. So you deposit your crypto, you pay with caps, and then it takes usually between 2 and 4 weeks to actually create the derivative and get all the ISINs and all the rest of things clear with Clearstream. And then you have a choice. You can either have it with us in your custody, or you say, no guys, I just want to move it out. I want to move it out to my private bank in Japan or in China or in Dubai or in North America or in Switzerland, and you can actually do that, right? I mean, you are the owner. It's only securitization. So Chen, can you go to the next slide? So how big is this area, right? I mean, why should you even participate and help us, maybe build it out in your country, or even invest in cabs, or even do that? I mean, it's actually pretty big. So right now the total derivatives market, and you can look at internet, and there's low estimate and higher estimate. So the lower estimate is actually $500 trillion, and you can, it's a pretty widely popularized fact. So Google it. So even if crypto derivatives just take 1%, it's actually $5 trillion, right? Dollars is just 1% penetration, right? And it's a pretty big market, right? So right now we're charging a securitization fee of 2.5%, but it will probably shrink to 50 basis points, because the bigger it is, basically the smaller it will get. But right now, there's a lot of demand for those crypto derivatives. Chen, can you go to the next slide? So what is now? Let's talk about the grayscale, because right now there is really no instrument for Ethereum and for Bitcoin Cash, and I mean for Monero and Litecoin and and Dash and NAM. There is nothing, right? I mean, so it's only kind of exists for Bitcoin, and I think a little bit for Ethereum Classics for some reason. So this is a snapshot on a specific date, I think maybe months ago, of Bitcoin Investment Trust. And you can actually do, you can do it yourself. You can look at grayscale.co is their website, and they publish it on a daily basis. And this company manages 2 funds. It manages Bitcoin Investment Trust, and this is a snapshot of that particular trust. So that particular trust only holds Bitcoins inside of that fund. And they show on their website 2 kind of prices. They show market price per share, and then they also show Bitcoin holdings per share. So let's start with the Bitcoin holdings per share of $353.43. So if you kind of look this 2 dots, it's parentheses, and you actually read the fine print, it says this. It says that this is like a weighted average using some kind of, some kind of formula of weighted average of prices between several exchanges of Bitcoin. And then they actually subtract their fees from it, so that's why it's like that. But roughly, there are 10, roughly, and I'm rounding right now, do your own due diligence and math, but roughly there are 10 Bitcoin shares, or 10.7, I think, Bitcoin shares, represent 1 Bitcoin. Let's say for purposes it's 10 to 1. So that means that 1 Bitcoin at that date was valued at $3,530. Average on let's say Bitfinex and Kraken. But at the same time, their shares of Bitcoin Investment Trust on OTC markets was implying that the price of Bitcoin was traded at 6,920, right? So that was a premium almost of, I don't know, 80%. And the reason there's such a difference is because institutional investors do not have any other instruments to actually hold Bitcoin. They cannot just open their personal account and put it on the custody of the Coinbase because it's not their money. They're responsible for other people's money, and they have to follow very strict procedures for title ownership, clearing, and settlement, regulatory oversight, tax implications, and they have to do it very proper. So because there is no route for them to actually buy Bitcoin other than through Bitcoin Investment Trust, they actually overpay for Bitcoin. And this is you can Bloomberg, you can do Bloomberg analysis on that, or you can just go to Grayscale, you can go to Google Finance and type in Bitcoin Investment Trust and pull this data. So can you go to next slide, Chen, please? So who are we, who are we that are doing this, right? And we have like a very strong team. So I myself, I work at Boston Consulting Group. I worked in an investment bank at KPMG, and after that I left and I started 2 companies, one in digital publishing, and it's a pretty big company now. It's over 1.5 billion in sales and rubles. And I also started together with my partner in investment bank in Ukraine, which was sold. And I also started an oil and gas business, which was sold in 2014. And over the last 2 years, we've been only focusing on crypto with my partner. Another partner of ours is Scott Freeman. He has our trading. He's also a partner in CyberTrust. He created one of the marketplaces in China, and he lives actually in China, called C2CX. And he's been quite active investor in crypto community for quite a big period of time. Part of our team is Tobias Saddle, who is basically our main advisor in Luxembourg. He used to work for Hogan Lovells. Now he has his own company, and he's basically the guy for all our crypto securitization structuring, because it's very, very complex. I mean, you have to understand, guys, that nobody done it before, right? This is like uncharted territories. So we had to create like claim security standards and standards for derivatives and terms and conditions, and to explain how that works to myriads of different providers, all of which do not have any clue what the crypto is. So it's been very hard, right, to do that. And we have quite a bit of strong advisors, right? One of our advisors is actually on regulation is Bill Delahunt. He's ex-congressman from Massachusetts. He's been prosecutor general for state of Massachusetts for 20 years. So he's a very, he's been sitting on the banking, Senate Banking Committee for regulation of financial markets in the United States. And he helps us a lot with just regulation and with context. Also, Marat Kichikov, who is one of the shareholders of a mining giant called Bitfury, and Bitfury is I think after Bitmine is the second market share worldwide for the mining chips and mining equipment. And Marat is basically their he is a shareholder, and he's also CEO of Bitfury Capital, which is an investment arm of Bitfury, and they've been involved with us, so they've been very helpful in things. So we have a few other advisors, including Son, and also David Gorodiansky, who is the CEO of Anchorfree, joined us recently. So we have a very good advisory team as well. So can you go to the next slide? Chen? Yeah. Oh, okay. Well, that's the last slide. All right. So Chen, how are you going to do this? Should we do a Q&A maybe right now?
Yeah, so if people have questions for Evgeny, if you can just submit them now and I'll read them out too.
Okay, guys, and any questions, right? I'm sorry if I went too fast or too many, complex words, but just ask any questions. And in fact, if you will listen to the seminar afterwards, feel free to, find me on Twitter or Telegram. And my Telegram is really easy. It's at CyberTrust. So just personally message me in case you have any questions. Do you have any questions, Jan?
Not yet. I think if we just give it a minute and see, sometimes people take a while.
No problem. Did you, yeah, okay. Chen, would you be able to send us a recording afterwards?
Yeah, I'll make a copy and send it to you, yeah.
Great, thank you. All right, guys, ask questions. Don't be shy.
There's no questions as of yet, Evgeny. As Evgeny said, if you have any questions, just he's got his contact details up here, and also you can contact Unicom and we can forward them to you.
Okay, perfect.
Okay. Evgeny, thanks a lot for this webinar. It was very interesting, and I hope everybody who attended found it interesting as well.
Yeah, and send it so we can also circulate it out to our communities, right? I mean, I think it was really cool that you. Yeah, and thank you guys. Thank you very much for organizing this. It's been a pleasure, attending in Amsterdam and meeting you guys, and yeah, thank you very much for this job.
Thank you.
Take care.
Take care. Bye.
Bye.